Hi friends, in the last 5 days, IREDA has fallen down by close to 12.30%. And if you look at Power Finance Corporation Limited, you will see that the stock is down by close to 8.33% in one single day, right? Also, if you look at REC Limited, the stock is down by close to 5% in one single day. Both REC and PFC being large cap stocks, the 8%, 5% correction in one single day is a cause of worry for many people. So $2 million question that we need to answer. Number one, people who already hold these stocks, what should they do? Should they exit the stocks because there may be a downturn starting in these stocks? And $1 million question number two is people who want to take fresh entry into these stocks. Is it the right time to enter into these stocks because there seems to be very good correction right now? We'll try and answer and understand what is causing this decline first of all so that you can make decision based on that understanding, right? So first have a look at my screen and you will see IREDA stock is up by close to 200% in just last 2 months because the IPO came in the month of December, and since then the stock has been rallying like anything, upper circuits as well, and I've created a separate video on this topic. So it has gone up by 200% in last 2 months. If I look at Power Finance Corporation, it has also gone up by 100% in past 6 months. REC always follows PFC. If you go and look at their stock price history, it's literally like a mirror copy, right? Because PFC has 52% stakes in REC Limited, right? So that is the reason REC and PFC are following the similar pattern when it comes to stock growth, right? So REC in the last 6 months has gone up by 117%. So when a stock is rallying like 100% in a very short period of time, like 2 months, 3 months or 6 months, what is likely to happen is at some point in time, there is likely to be a correction. And the main reason of that correction is a profit booking by investors. Now, what triggers that profit booking is what we need to understand. Although I can never be sure of what triggers this profit booking, because profit booking can be triggered at 100%, it can be triggered at 200%, right? So what really triggers this is a combination of two things in my view. One is valuation and number two is fundamentals, right? So I will not give you GAN here. I will actually prove this point from example of PFC. So what you see on my screen is Power Finance Corporation's PB chart, right? And if you see in the last 5 years, PB ratio of this company has been at around 0.6 from a median PB perspective. What you see right now is PB is touching all-time high. It is gone 1.5, 1.6 here right now. It is all-time high. So from an investor's perspective, they know that the stock is at an all-time high valuation from a PB perspective, right? In NBFC and banks, we look at PB as one of the critical ratio of the valuation. So we are considering PB ratio here, right? Now, in my view, a stock being overvalued alone cannot trigger the profit booking, right? Because this 1.6 can tomorrow go to 1.8. What is stopping that, right? Nothing is stopping, because the way it has gone from for example, 1.3 to 1.6, it can again climb from 1.6 to 1.9. So there has to be some other trigger in combination with valuation that will bring the prices down, right? So for that, what I want to do is have a look at their quarterly results that they declared on the 8th of February, just the time when the stock started to fall, right? So if you go back and have a look at their consolidated highlights results, then you will see that overall, their profit after tax has gone up by 26%. So very good number actually. Their loan asset book or their loan book has grown by 19%. So all in all, the fundamentals are also looking good. But there is one reason here. If I come down and show you page number 24, you will see that disbursements, the loan that they have actually distributed in the quarter, if you compare quarter 3 of last year, which is fiscal year 23 versus fiscal year 24, you will see that it has come down from 25,000 crores to roughly 23,000 crores, right? Now, when this happens, investors start to get slightly worried that last year, same quarter, they did 25,000 crores of loan distributions. This time, they have done less than the last year. So potentially, the company is going to witness some decline from here on in disbursement is what few of the investors might start to think, right? Also, the management commentary plays a very important role here. So if I show you the management commentary of Q3 results, you will clearly see that their long-term target is to grow their loan book by 15 to 20%. And if you read this commentary, you will make out very clearly that management is saying that this year we are expecting it to be around 15%. So they are going to the lower end of their guidance, right? And when that happens, investors start to think that maybe the growth is not going to be there in this year or next year, or the growth rate is going to be slightly lower than what we were expecting. Had it been around 20% or 22%, then the valuation will still be okay because the stock prices will continue to go up, right? But here, because we can see there is some conservatism from the management from a commentary perspective, also we can clearly see that the disbursements have come down. In the short term, there is going to be a profit booking, and exactly that is what has happened in the case of PFC. And when the PFC shares come down, typically what happens is REC also follows the suit because PFC has 52% stake in REC. I hope this point is very clear to you and this analysis is very clear to you why the prices are coming down. And if you like this analysis, hit the like button. Let me know in the comments a simple thank you. It will motivate me to do more analysis for you at zero cost. Also, if you want to consume lot of in-depth analysis on stock, you can consider joining my YouTube member community because I post long posts there which gives you breakdown of many stocks that I do not create videos about. Now, whether you want to exit the stock and book your profits, it's up to you. Whether you want to take fresh entry into these stocks is also up to you, but what we really need to understand is the fundamentals of these companies, right? So on my channel, I've already spoken about REC in a separate video, so please go and watch that video if you want to learn fundamental analysis of REC. I've spoken about IREDA as well in length. Now in this video, I want to cover REC Limited full fundamental analysis so that you get the complete picture of these three stocks and you can make informed decisions. So first thing first, I'm going to speak about their quarter ended 31st December 2023 results, right? PFC is a Maharatna PSU company. We spoke about what is Maharatna. It is a highest status a PSU company can ever get, right? So from that perspective, PFC is a very, very safe company. But if I talk about the first important point here is the loan book. I've spoken about this as well, that NBFCs and banks, whenever you are analyzing, the first thing you need to look at is the outstanding loan book. So if you look at the outstanding loan book here, as of 31st December 2023, it is 4,57,000 crores, right? And it has grown by close to 16% if I look at the last 9 months of growth, right? If I compare this growth with IREDA, IREDA's growth is around 33% as quarter-on-quarter basis. And if I compare this with REC, you will see that REC's growth is 18%. Now you might jump into conclusion to say that IREDA is growing at a faster rate of 33%, while REC and PFC are growing at a slightly lower rate. The point here is that you need to understand IREDA's loan book is only 50,000 crore, while REC and PFC, their loan book is close to 4,50,000 crore. So growing the base of 50,000 crore to 100,000 crores is much easier than growing 5 lakh crores to 10 lakh crores. I hope the scale point is very, very clear to you. So you cannot compare 33% growth with PFC and REC's 18% or 16% growth. Now, by the way, I have nothing against IREDA. Many people are saying that I missed out the rally of IREDA. I didn't get the IPO. Maybe that's why I'm against IREDA. I have nothing against IREDA. IREDA is a very, very good, fundamentally strong stock. I'm not buying that stock because it is highly overvalued in my view. Not a recommendation for you to do, but in my view, it is trading at a PE of like 55 and 60 right now, okay? And PB ratio is not even available on screener. So I can't even compare it with REC and PFC, right? Coming back to PFC, in my view, REC is growing at a better rate than PFC. Clearly, we can see that numbers, right? But more importantly, what is the outlook for the growth for PFC is what we need to understand. And their management is anticipating that the growth of loan book is going to be around 15% this fiscal year as well as next fiscal year. So it is not going to be 20% growth in my view. That is what management seems to be speaking about. So we need to think about this growth is going to be 15%. Market is baking this number into their calculations and we might see the stock prices falling down in the short term because 15% growth is not on the higher end. So there may be some more profit booking going on in this stock. So please be careful if you're considering investing in this stock right now. From a long-term perspective, the stock looks very good, but let me also speak about few other factors. Second critical point that we need to analyze is their disbursements track record in the last 9 months or 12 months. And if you look at my screen, you will see in the last 9 months, it has gone from 46,000 crore to 79,000 crore. So a very, very good growth rate we can see here. But quarter on quarter basis, it has come down as we spoke earlier in the video, 25,000 crores to 23,000 crores. Now the big question here is that if in one quarter the disbursements are down, does it make this the company is bad company? Absolutely not. In my view, if you're a long-term investor, 5 years investment horizon, 7 years investment horizon is what you're looking at, then one quarter here and there does not make really big difference. But just because the valuation is really, really high at this point in time, the natural profit booking is likely to happen, right? So this point we need to really understand. But if I move to the asset quality of this company, you will see that Consistently, it has come down from 9.39% to 3.52% from a gross NPA perspective, and from a net NPA perspective, it has come down from 4.55% to 0.90%. So it is looking very healthy. In the last 4 quarters, they have not added any new NPAs, and this is what I was reading in their management commentary. REC has not done it for straight 8 quarters. So REC is much better in terms of the debt quality if I compare that with PFC, right? But if I come back and talk about their key ratios as well, you will see that the yield on earning assets, so meaning 10% is what they're earning from their interest earning assets, which is a very good number. Their cost of funds is 7.47%. Very similar profile is what we saw in REC, if you remember the REC video, right? Therefore, the spread is 2.55%, very, very good. And from a NIMS perspective as well, looking 3.42. So overall, all these indicators are telling me that PFC right now is a very, very strong, fundamentally strong company. Okay. But what is the future outlook? That is very, very important. And let me bring that macro factor into the play right now. So if I read their management commentary, what Parminder Chopra ji is talking about is that right now the interest rates are on higher side. Although RBI has not made any changes to the repo rates, but still in the market, interest rates are very high. Therefore, the liquidity is a problem. But what they are doing is they are able to still maintain their spread, which is the difference between how much they are lending at and how much they are borrowing at, by increasing their lending rates. Okay, so they are able to maintain their spread, which is great, right? But in the next 1 or 2 years, what is likely to happen? If I now link this back with my budget video that I did, and I spoke about how Indian government has announced that the fiscal deficit for this year in the interim budget, they talked about fiscal deficit is going to come down, right? 5.1%, if I remember that number. What does that simply mean? That government is going to borrow less money, right? That means that in the market, there is going to be more liquidity, right? And also RBI is going to cut the interest rate, hopefully in the next 6 to 9 months. And that will also lead to higher liquidity in the market because the borrowing costs will come down. And when the borrowing costs come down, what happens is more and more companies are going to borrow the money. And therefore, the loan book growth that companies like NBFCs or banks will see is going to be on the higher side. That is why you will see more and more people are putting their money into finance stocks right now. Again, I am not giving you a recommendation, but that is one macro factor that we need to consider while we are thinking about PFC in the next 2 to 3 years of what is likely to happen. So the borrowing cost is going to come down, and in that way, the loan demand is likely to be there from this macro perspective. Now, the company has not disclosed the sanctions data that I talked about in my REC video. So unfortunately, I cannot present that data to you. But if you look at the revenues and profits growth of this company, PFC, you will see in the last trailing 12 months, 14% sales growth, 30% profit growth, which is very, very good in my view. But look at the stock price. It has gone up by 268%. So again, from a stock price perspective, it has given very, very good return in the last few months. So we are likely to see some profit booking going on here. If we also look at the shareholding pattern, we will see that the Indian government has 55% stake solidly maintained in the last few years, 3 years. FIIs also have been maintaining a very constant stake in this company. So is DII. So overall, I think people have been sitting on this stock for last few years, and there is likely to be profit booking because of these reasons that I've explained in this video. Now, if you look at the valuation, I think we have spoken about the valuation as well. PFC is looking at 1.52 PB value right now, which is again on a higher side from its own comparison perspective, but from an industry perspective, it is slightly still on the lower side. REC, if you look at it, slightly more overvalued than PFC, but again, this is a better stock in my view from PFC, right? Comparison perspective. Also, if you see here, IREDA again trading at a PE of 55. There is no PB ratio here available for that, so we can't really compare that. But all in all, what is my conclusion here? So my conclusion is simple, that all three stocks, IREDA, PFC, REC, are fundamentally looking very, very good. They're strong companies as such. There is going to be growth in all the three companies. There is no doubt about it. IREDA is the most overvalued in my view, right? And PFC and REC are also overvalued right now, and there is likely to be profit booking going on in these stocks, right? But both stocks, REC and PFC, are strong contender to be included in the portfolio for the next 3 to 5 years. Again, I'm not giving you a recommendation here, but you need to just think about what is the right value at which you are ready to buy these stocks. In my view, right now, if I were to buy, I would not go and buy these stocks because the prices are on the higher side. So please do not take this as a recommendation. I'm just simply giving you my view. I could be 100% wrong here, and the prices might go up from here, right? We cannot predict the prices. So please do your own research and make your own investing decision. I'm presenting you analysis so that it helps you steer into a direction. You can do some more analysis. And if you like this video, simply hit the like button. Let me know in the comments a simple thank you. And consider subscribing to my channel as well. I will see you in my next video. Until then, keep rocking.